Okay, good morning, everyone. Well, afternoon or evening, depending on where you're located at. Okay, welcome to today's daily currency call. Today is Wednesday. Okay, so we'll be going through anything pound and euro. All right. So I will kickstart this call with what went down during the Bank of England's monetary policy decision last Thursday. Okay, well, probably some of you guys have already know what happened. Okay, you guys actually joined us for the last Thursday's BOE prep call, okay, when we actually went through the whole, we actually set through the whole Bank of England's announcement, okay, and actually I gave a quick breakdown of what happened during the in the statement and during the the announcement as well, okay. But nonetheless, today I will go through maybe slightly more in details. All right. So first thing first, all right. No, wrong screen. Let me try again. Any information shared in this video is not intended to be a trade recommendation. Okay, it is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. Now, with that, we can head over to statement. Okay, so I'll be providing you guys with the statement, the Bank of England statement later on. So just don't worry about the link and things like that. Okay. So as you can see from the header, bank rate increased to 0.5%. Okay, so I would say it's not a surprise this time around that the Bank of England actually hiked interest rates. Okay, so they hiked by 0.25%. Previously was at 0.25. Okay, so right now it's actually at 0.5%. All right. So over here, okay, you can see that at its meeting ending on 2nd February 2022, okay, the MPC voted by a majority of 5-4 to increase bank rate by 0.25 percentage points to 0.5%, okay. Those members in the minority preferred to increase bank rate by 0.5 percentage point to 0.75%, okay. So basically, there are altogether 9 voting members, okay. Well, 9 members voted for, whether or not to hold interest rate unchanged, to hike or to cut. Okay, so apparently, all 9 of them, okay, actually voted for a rate hike. So out of the 9, 5 of them voted for an increase of rates by 0.25%, whereas the other 4, okay, which is over here considered as the minority, okay, actually voted for a 0.5% hike. Okay, so all in all, rate hike wise, I would say this is very, very hawkish coming in from the Bank of England. Okay, basically everyone voted for rate hike, and I would say it's pretty much close. Okay, well, they would have hiked by 0.5%. We would have seen a 0.75% over here, okay, under this current bank rate section over here, okay, if not for just one more member, okay, it's 5-4, otherwise it would be like 4-5 or something, okay. So overall, rate hike wise is very hawkish, okay, and we can definitely expect more coming in. Well, as Governor Bailey mentioned during the press conference, okay, we can actually expect more rate hikes coming in from the Bank of England. Whether or not it will be 0.25 or 0.5, it will probably depend on how inflation turn out to be. Okay, so that is for interest rate hike. Okay, that's the first major point to take note of. The second point to take note of is, let me just over here. Okay, once again, a unanimous vote, okay, from the Bank of England to begin to reduce the stock of UK government bond purchases financed by the issuance of central bank reserves by ceasing to reinvest maturing assets. Okay, the committee also voted unanimously for the Bank of England to begin to reduce the stock of sterling non-financial investment grade corporate bond purchases financed by the issuance of central bank reserves by ceasing to reinvest maturing assets and by a program of corporate bond sales to be completed no earlier than towards the end of 2023 that should unwind fully the stock of corporate bond purchases. I've just read out a large paragraph of, I probably lost you guys somewhere around along the lines. Okay, so what basically this paragraph over here, okay, is trying to say is that all members, okay, of the Bank of England committee voted for QE, unwinding of QE, to take place ASAP. Okay, so QE under the Bank of England, there are two parts. Okay, just like the ECB, they have like two parts. Okay, so one part is the government bond purchases. Okay, so that is one. The second part is actually the stock of sterling non-financial investment grade corporate bond purchases. So they purchase two things. First thing, government bonds. Second thing, investment grade, non-financial investment grade corporate bonds. Okay, so these two different bonds, okay, will have to be dealt slightly differently, I would say. Okay, so let me just scroll down to the more details. All right, let me just get to the end over here. Consistent. Okay, over here. So consistent with the MPC's guidance set out in the August 2021 report, the committee agrees this meeting that it should cease any. Okay, so this is for the government bond purchases, and then okay, let's start off with the corporate bonds purchases first. All right. So how are they going to do it? Okay, so basically, what they plan to do is to initiate a program of corporate bond sales. Okay, basically selling back the corporate bonds into the market. All right, or maybe into like back to the major financial institutions in the UK. Okay, and timeline wise, okay, this whole selling back of corporate bonds, okay, into the market, is to be completed no earlier than towards the end of 2023. Okay, no earlier than towards the end of 2023 is really very, I would say, vague. Okay, so personally, I would take it as end of 2023. Okay, to be on the safe side, probably like December 2023, no earlier than that date. Okay, that would be, I would say, the safest consideration. Okay, so right now, based on this statement, I would say that by end of 2023, we can expect, okay, corporate bond sales to be carried out in entirety. Okay, meaning they would have, meaning the central bank would have fully sold back the or the bonds or the corporate bonds holdings under the Bank of England, okay, to the market. So 2022 is this year, 2023. So it's probably like another a year and 10 months to go, okay, before the unloading of corporate bonds can be completed. Okay, so that's for corporate bonds. All right. What about the government bonds? Okay, of course, there are different conditions, there are different considerations as well. Okay, so over here, the committee reaffirms that it will consider beginning the process of actively selling UK government bonds only once bank rate, which is the interest rates, has risen to at least 1%. Okay, and of course, depending on economic circumstances at the time. All right. So at the moment, bank interest rate is at 0.5%. All right. Let's just do a bit of a speculation. Okay. Suppose the Bank of England were to carry out more rate hikes in denomination of 0.25%, okay, then probably 2 meetings down the road, not necessarily 2 months, okay, it depends on when they meet, because they don't meet on a monthly basis, okay, they probably meet like maybe 8 or 7 or 9 times a year, okay, but suppose they actually carry out 0.25% of rate hike during every during the next upcoming meeting, okay, then 2 meetings down the road, okay, the Bank of England will be ready to start unloading its government bonds holdings, okay, back to the markets or back to the governments and things like that. All right. So my take is that the Bank of England may very well start its unloading of government bonds earlier than its unloading of corporate bonds. Okay, but to be honest, whichever comes earlier, it doesn't really, I don't think it's going to be much of a concern at the moment, all right? Because what they want is to, get started on all this whole unloading of bonds, this whole process of unloading of bonds. Okay, so whether or not the government bonds gets to be unloaded first, or the corporate bonds, it doesn't really matter. Okay, what it matters is the Bank of England is looking towards to the start of unloading bonds. Okay, and it's by itself very hawkish, because they are definitely moving towards monetary policy tightening. Okay, and with more rate hikes to be expected, I believe by the end of this year, okay, if things were to progress smoothly, then we can actually expect the Bank of England's interest rates to actually rise back to probably pre-pandemic level. Okay, hopefully they just keep rising by 0.25% at least. Okay, once again, it depends on how the voting turns out to be during the next few meetings. Okay, so that is for quantitative easing. Okay, rate hikes will continue. Quantitative easing will soon, okay, start to, well, I would say it's probably coming to an end already, probably by March or April. Okay, once they fully purchase the whole, I think, 890 billion pounds of bonds or assets. Okay, so once that has been hit, okay, and the conditions has been met, they will start to unload its bond holdings. Okay, so overall, these two main points have actually, has actually shown that the Bank of England is very hawkish. Okay, which was why last Thursday, when the announcement was released, we actually see a strengthening in the British pound across the board. Okay, and another thing is that they have released their quarterly economic projection. Okay, so through its monetary policy report. Okay, and let me just hit to page 12. Okay, this time around, okay, let's just look at the UK GDP. Okay, for the year of 2022, this year, economic growth, okay, unfortunately, all right, is expected to slow down slightly, okay, from the central bank's previous forecast back in November or December. Okay, so as you can see in this parenthesis, in this bracket, previously they were expecting growth this year to be at 5%. Okay, but then it has since been revised to 3.75%. Okay, and then in 2022, there's a slight downwards revision as well, from the previous 1.5% to 1.25%. And then in 2024, which is really quite some years down the road already, okay, it remains unchanged. Okay, but at the moment, to be honest, this is not too big of an issue as well. Okay, as long as the whole COVID situation gets under control, it doesn't deteriorate any further. Okay, and inflation were to tone back down to the central bank's 2 to 3% target and things like that, then eventually we will see economic growth return to UK. Okay, so that is for the UK GDP. How about okay, let's look at employment. How about my unemployment rate? Okay, this year, okay, unemployment rate is expected to still remain unchanged at 4%. Okay, then for 2023, there is a slight upwards revision. Okay, from the previous 4.25% to 4.5%, and then in 2024, from 4.25% to 5%. I'm not exactly sure why they have actually revised upwards for 2023 and 2024, especially 2024. Okay, maybe it's a longer term forecast and things like that. But don't forget, okay, keep in mind that these figures may be revised, okay, and will be subjected to revision on a quarterly basis. Okay, so I would say anything beyond 2022 for the moment, I mean, it's still early in 2022, right? So anything beyond 2022, I will just take it with a pinch of salt and see how it goes. Okay, and then finally, probably the most important one, okay, is inflation. Now, look, during the previous economic projection, okay, the central bank actually projected 3.5%. Okay, on an annual basis, inflation were to rise by 3.5% in 2022, but it has since been revised upwards by I would say, substantial revision. Okay, it has been revised to 5.75% this year in 2022. Okay, so it seems like the Bank of England is not going to, it's still having this it's still expecting inflation to rise strongly. Okay, for the time being for 2022. Okay, and that actually I would say tallies with Governor Bailey's comment that more rate hikes can be expected from the central bank this year and things like that. Of course, if the central bank themselves, they are actually expecting inflation to rise further, okay, this year by this upwards revision of projection, okay, then it doesn't make sense for them to actually slow down their rate hikes and things like that, right? So the projection materials together with the press conference actually, I think, pretty much sums it up that we can actually expect more rate hikes. It's just a matter of whether it's going to be 0.25% or 0.5%. Okay, and then for 2023, inflation is still expected to rise slightly higher than the previous projection. Okay, previously it was 2.25%. Okay, for 2023, and then it has been revised upwards to 2.5%. And then only in 2024 it has been revised down. Okay, I would say a small minor revision, downwards revision. Okay, from the previous 2% to 1.75%. Once again, 2024 is really too far down the road. We're not going to pay that much attention to it. Okay. Overall, this time around for the economic projection, I would say that it's in line with the central bank's plan to carry out more rate hikes. Okay. Growth-wise, not to be worried at the moment. Okay. Employment-wise, okay, at least for this year, unemployment rate remains at 4%, and I would say it's pretty much of a healthy level, and we can expect more change in the near future. Okay, maybe during the second half of 2022. Okay, so that is for the economic projection materials. Let me see if there's other things to consider. Okay, I think that's all I have to share for the Bank of England monetary policy decision last Thursday. I actually suggest, okay, you guys to head back to the video. For those of you who have not, who did not join us for the call last Thursday, okay, head over to the YouTube channel to, well, actually, I think it hasn't been released yet. Okay, if you guys, I'll be posting the video again in the EcoFin platform. Okay, just so you guys can, have a view of how it's like when when we have evening calls and when it actually coincides with any upcoming major news. Why do I say so? Because tomorrow, okay, the US CPI data will be released at 21:30 GMT +8, and we will be having another round of evening calls, okay, whereby Jin and I will provide you guys with trade ideas, basically to prepare you guys for the CPI data release. Okay, personally, I feel that there's going to be movements, okay, in the US dollar, so we'll definitely be throwing out very short-term trade ideas for you guys tomorrow. Okay, just watch the BOE video last Thursday, and just to have a feel of how fast pace is like, when this whole session, this whole evening session is being carried out when. Well, it was actually definitely more furious because it was during our call that the Bank of England was having its monetary policy decision announcements and press conference as well as the ECB's what do you call that, announcement. Okay, so is there any questions? Are there any questions? No questions. Okay. If there's no questions, I will hand it over to Jin for his trade ideas and analysis. Over to you, Jin.
Thanks for that, Gimme. And like Gimho was just sharing, we do have the the CPI numbers to be released for the US. So what I'll be doing is I'll be covering through a bit of what Scott would normally go through, the dollar index first, and then after that into the pound, and then into the euro pound, guiding you through some trade ideas. With that said, we do have the CPI numbers to be released, and like Kim Hong was saying, expecting some movements there for Thursday, with the US CPI looking to go to a 0.4. There has been rumors, there has been talk that CPI might be a little bit toppish already. It might have reached its max, but I think, or our view here is that we might see it move up one more time before we see that drop back down again, or that stability coming back in. With that, the focus on the pound dollar Friday, we do have the preliminary GDP quarter on quarter for the UK, looking at a 1.1%. And like Kim Hong was sharing with you, the GDP numbers looking to form a little bit of a base in the longer term for the UK. So what that all means here is looking at the dollar index chart here. This is on the H4 time frame dollar index. I've just put in some lines there. I like how this 95.69 level seems to have supported and resisted at several intervals. Most recently, it's tried testing, but seems to be rejecting. I think in the short term, we might see the dollar index come back down to as much as 95.12. So about 95.12. I don't think it will go all the way down towards that 94.69 levels. I think 95.12 before the CPI number. If it does come out a little bit stronger than expected, we could see that push back up again. So quite simply, for the dollar index in the short term, we're looking at a little bit more weakness for dollar, but then I think with the CPI number, we might see it push back up towards 95.69. What that means here is for the pound dollar, I've put in a trade idea already. This will be something valid until the end of the week, so until the 11th. I'm looking for the pound dollar again on the H4 time frame at this current point of 1.3562. So I'll move that down slightly. I think you can wait for it to close off that candle, not enter immediately, because at this point it's not going to do too much. I think at about a 1.3565, candle has to close above 1.3565. You could be looking for a trade up towards that resistance of 1.3627. So what that means is you might be looking at about a 60 pip move upwards. You could have your stop loss at about 26 pips, or even just to have a 30 pip stop loss. 30 pip stop loss, 60 pip take profit level, 1:2 risk reward ratio towards the upside, but this candle has to close above 1.3565. Quite straightforward here for the pound dollar. This is also to go inside with how we expect the dollar index to move, dollar to weaken, to push the pound dollar slightly higher. With that about the pound dollar possibly moving higher towards that resistance level, what this could mean on the euro pound is, as the pound dollar moves up, we're looking for the euro pound to turn towards the downside, for the euro pound to move lower. At this point, I'll take away this. Kim Hong is going to kill me for taking away this, but all right. So this is a bit confusing for me. Right, so I'm looking for the pound, for the euro pound, for it to break lower. I wouldn't be looking to trade it down towards this 84 level. I think what would be a more prudent move or more safer move, especially to space out your trades. You might be trading the pound dollar, and then as that move develops, you could be looking to sell the euro pound towards the downside. I wouldn't have a big stop loss. I would have about a 20 pip stop loss for a good 40 pip take profit level. If it closes down and it breaks below that 0.84 level, look to sell at about 83.92. You could have a 40 pip take profit level, a 20 pip stop loss, again a 1:2 risk reward ratio towards the downside. Could it move all the way down? Quite possibly, but that would have to depend on the pound dollar breaking above that resistance level. And also for the euro dollar, something we spoke about yesterday. Also for the euro dollar, possibly not to move up too high, to sit in that consolidation or to slowly move up, or even later tomorrow with the CPI number possibly turning back down. So it needs for the euro dollar to push lower, it needs the pound dollar to push higher for that big move. But I think as a short-term trade, as something that you can do in the interim, you could be looking for the euro pound for about that 40 pip towards the downside. So quite a couple of trade ideas. We have seen a very quiet 2 days, Monday and Tuesday. I think today, tomorrow, and Friday, we might see a little bit more volatility. We might see a little bit more movement into the markets. At this point, we have talked about the Aussie dollar. We've talked about trade ideas on the euro, trade ideas on the pound dollar, trade ideas on the euro pound as well. I think tomorrow's CPI and our session in the evening during the CPI release will be quite crucial for some shorter term trades as well. With that said, any other questions? No questions. Hi, Imran. Anything else to add, Jimmy?
Nope, that's all from me.
All right, so we'll keep the session short and sharp. Look out for the uploads, and then we'll catch you again tomorrow. Okay, now, bye.